Newmont is kicking off the earnings season for the mining stocks today after the market closes. So let's look at the chart, let's look at the fundamentals and see, is Newmont a buy? Are there better stocks? What should we expect from this quarter moving forward? Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks and month. Well, let's start with the chart. Here's the daily on Newmont, and you see very clearly not great. It's not terrible, right? But not great. We have broken the uptrend that has been in place since July, but we haven't confirmed it yet. We started off Wednesday deeply in the red, but had a reversal candle, and we're still above the 50-day moving average, the purple line. That part is fine. Newmont reporting earnings today after the market closes, so that will significantly move the stock. What are the numbers? The whisper numbers are somewhere in between 142 to 145 on the earnings side, and then on the revenue side, 5.2 to 5.25 billion dollars. I think Newmont will deliver. If you look at the earnings in the past quarters, you can see, there we go. They have beaten the estimates 6 out of the last 7 times. But a lot of it has to do with the gold price, because if we zoom further out, you see Newmont in all its beauty between 2019 and 2023, and you see they miss earnings all the time. The reason is Newmont Mining, it is one of the biggest mining stocks in the world, and it therefore profits greatly from being a heavyweight in the GDX ETF and being one of the very few mining stocks that institutions and hedge funds can actually buy in amounts that put a dent into their performance. That's important to remember, right? All these cute explorers, all the developers, some of the juniors, if not most of the juniors, they're all nice, but they're really small. If you're a big hedge fund and you really want to get some performance out of the gold miners, you're basically limited to GDX ETF, GDXJ ETF, and maybe half a dozen companies that you can invest in. Newmont is one of them. So the institutions, they're investing in Newmont not because it's a great company, because it clearly hasn't been in the past. They're investing in it because out of lack of options. You want to invest in the best company, you invest in the Agnico Eagle or Alamos Gold. So I think the number's going to be good. I don't think the number's going to be breathtakingly great. And the reason is that if we look at the gold price, everybody's looking at, oh, gold 4,000, it's going to be a great quarter. Yeah, hold on for a second. If you look at it, let me draw this in here. Here we go. Here we go. And you can see that for 2 out of the 3 months, the gold price wasn't doing anything in July and August, right? It started moving in September, of course, and like middle of August, September. But basically for the first half of that quarter, it's about the same than it was in the second quarter. So we're going to get all the great gold 4,000, gold 4,100. If it holds, that's what we're going to get in the fourth quarter, not in this quarter. So don't expect like super numbers. Newmont, in the mining sector, notoriously known for not having the best management, right? They always had cost problems, and therefore they're one of the more reasonably valued, you can even say cheap mining stocks. And that attracts a lot of investors. But the question is, do you want to invest in the cheap mining stock or you want to invest in the best mining stock? Now, let's get back to the chart and see if that gives us an indication of should we buy this company. I don't own any stocks of Newmont. I was mediocrely interested. If we move out long term, let me show you what we have here. We can see that we have this very, very long-term uptrend that goes all the way back to the 80s. And as you can see, we try to break out on the weekly here. And now we're correcting this. And if we look at it on the weekly, the candles, the last 4 weeks, including this week, don't look so great, right? As you can see down the RSI on the weekly, we are massively overbought as well. So if this uptrend, this line right here, breaks on the daily confirmed and on the weekly, basically if it confirms on the daily because we have Thursday already and then tomorrow one more trading day, we'll confirm on, we'll have a red candle and a break on the weekly. That will obviously create some further downside. That would happen if the gold price keeps correcting either over price, so by going down further, falling below 4,000, or over time. If we get a correction over time, then obviously people will lose interest in the mining stocks. This will be specifically painful for the explorers and the small juniors, because that is where mostly retail makes the prices, not the institutions, because as I told you earlier, they're too small. But even a stock like Newmont probably would get hit as well. So we got a really good support zone right here, right? We have this horizontal support zone. We have the 50-day moving here. That should hold up. But if gold, and let me pull up the gold price real quick. If gold falls below 4,000, we can make this go away like Harry Potter. Here we go. Then we break the uptrend that I've been telling you about. Remember, I've been telling you about the uptrend, and today it got honored. Well, yesterday that is. I mean, we'll see how it does today. But here you see it got honored, right? We sold off on Wednesday almost to the T and then got bought up. If we fall below 4,000, we'll break the uptrend. I believe we're going to go back to 3,500. I think we're going to test the breakout area. Right? This area right here, as you know, I used to have it in the chart all the time. And if you're not familiar with this, hit the subscribe button so you don't miss a video, so you understand what we're talking about, because markets continually evolve. And this is what happens. I put this out of the chart, right? Well, it was a resistance zone, now it's a support zone. I think we could absolutely retest 3,500 if things get really hairy with a sell-off in gold. Remember, from the top, that's only a 20% correction, completely healthy. Completely healthy. I've said this before, I believe that we just hit an intermediate top, so for the next could be anywhere from 2 months to 6 months. We'll see. This will be it in gold. But we will see what does that mean for Newmont, because that's what we're talking about. So I believe if the gold price goes down further, it doesn't necessarily have to be 3,500. Would be okay if it is. Where is my, here we go, is my Newmont. chart. 3,800. Then I think we're gonna go all the way down to this lower blue support zone. So that would be about 15% correction. And on the weekly, you can see where this comes from. There it is. It's the old all-time high from 2011. And then obviously 2019, 2021, we hit it again. Getting back to it would be a normal correction. Do I need to be in Newmont now? Personally, I don't think so. I think the stock has run its course. Yes, it's cheap. It's cheap for a reason. It's, again, not the cream of the crop, not the best of the best, right? This is not Google when you want to buy the search engine. This is more like Yahoo, without failing, obviously. It's a big-time company, but it's not best in class, and that's what you want to buy. If you want to invest, you want to use those corrections to buy the best in class. And remember, and I'll leave it with this, all right? Remember, we have a bull market in gold, in silver, in the precious metals, in copper, and in the miners. When you have a bull market in the commodity sector, it's the same as in the equity sector. Weakness, corrections are buying opportunities. That's what we need to remember right now. I'm loving this correction. I'm loving this correction. I'm using this time to update my watch list and see what I can buy in the mining stocks, because that's what we have now. We'll talk about the numbers after they come out. I'll wish you a great day. Have a good one. We'll talk soon. Bye-bye.